Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for February the 3rd, 2010. Now our first position tonight, we're going to be looking at futures contracts on gold. What we're going to be looking at here is getting into buy positions. We can see that the predicted 3-day has crossed over the predicted 8-day exponential moving average from vantage point, suggesting that we've got somewhat of a possible trend reversal here. Now we've closed here at 1117.4, which we can clearly see is above the 18-day predicted moving average from vantage point, suggesting that gold is getting ready to continue its uptrend. Now, with that said, we're going to now go into our daily report and have a look at our positions, or have a look at our predicted highs and predicted lows, and see if that matches up for a potential move higher for, again, Wednesday's trading. Now, looking at this, we can see we have 1102.3, 1120.4. So essentially tomorrow on a pullback towards 1102.3, we're going to be looking to buy gold contracts. We're then going to be looking for a move back towards the 1120 mark, potentially higher. Now, 1106.5 is also a possible entry point here. If the market pulls back to the former resistance area, then that could potentially be a very good entry point on buys. So in actual fact, looking closer at this for tomorrow, we actually are going to use the 1106.5 area, to buy, get into long positions on the gold contracts. Now, that's our first position for tomorrow. Now, for our second position, we're going to change gears here somewhat, and we're going to look at sugar contracts. Now, the futures contracts on sugar here, sugar has been on quite a tear as of late. We've got this crossover that's taken place from vantage point at the beginning of December, continues to hold here. We can see that the market has come down, touched the 18-day predicted moving average from vantage point, and then subsequently bounced higher. We can see this again happen last week. Market now extending higher, predicted 3-day, unable to even cross over the predicted 8-day exponential moving average from vantage point, suggesting that sugar futures contracts are getting ready to move much higher. Now, again, we're going to go in, check our predicted highs, predicted lows. We're going to look at the neural index. All of these things for our trade tomorrow are what we're going to be looking at to make sure that one indicator is confirming the other. Now, looking at our position tomorrow, we can see our predicted low. First of all, we've closed at 29.40. Our low for tomorrow is 29.04. Our high is 29.87. Neural index is pointing down, which is good, so we're going to let the market come to us. We're going to let it pull back to the 29.04 range. When it hits that area, we're then going to get into our long positions. Now, again, looking closer at this, we can see that sugar, again, has been moving up steadily. It's come back. It's done a little retest, but primarily it is holding its own, and it is likely to head much higher. Now, again, looking at the Vantage Point software, looking at this crossover that took place at the $22 range, we're now sitting at the $29.30 range. This was a very, very strong trade. Now, if you entered into a couple of small contracts, they could produce quite well on again a very small position, because we've got such a dramatic move here that essentially ran risk-free for the last 2 to 3 months. So always something to take into consideration when we're trading. Number one rule here, we want to buy on dips. We don't want to sell contracts. A lot of people will try and trade both sides of the market. Clearly, Vantage Point is not suggesting that here. They're suggesting staying on the right side of the market, which is the buy positions, and that's what we're going to be doing for tomorrow. So again, my name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for February the 3rd, 2010.